Hey, what's going on, guys? This is the Diamond Hand Prodigy. Now, some of you guys might know me from TheJuan&Only. It's a tech channel that I have, so you always know that I have you prepared with the latest iPhones, the latest tablets, PS5s, Google phones, whatever it may be. If it's tech, I'll most likely review it. If you haven't already, go ahead and head over to TheJuan&Only if you're into tech and give me a subscribe over there. But for this channel, I wanted to first of all welcome everyone here. Over here on the Diamond Hand Prodigy, we're going to look at a lot of stocks, a lot of options, credit, basically anything that has to do with the world of finances, right? Because whether we want to admit it or not, a lot of us could use a lot more tips and pointers when it comes to managing money. I know a lot of you guys have plenty of questions about the stock market, maybe about your credit score, and no worries, on this channel we'll cover all of it. As you might have seen from the title of this video, I've been meaning to do this for quite a while now, so we're starting out with $10,000 US, and we're going to do the Robinhood 10K to 100K challenge. Now, if you've never heard of that, that's because you probably haven't. I just made that up right now. But yeah, the objective of this video series is to transform $10,000 into 100K. Now, how long that'll take? Not too sure, but the objective is the same. We have one goal, and that is to turn 10K into 100,000 buckaroonies, okay? Before anyone in the comments says anything, yes, I sound a little bit weird. I do have a palatal expander at the roof of my mouth, and it was just installed yesterday. So not only has it been a drag to chew and swallow, but also talking makes me sound a little dumb, so please excuse me there. It will get better with time, I promise, as my mouth gets adjusted to the palatal expander. All right, and before we dive in straight to the plays, some of you may have noticed my UGA sweater. That's right, the Dogs won the national championship just yesterday. So I was really excited about that, given that I do go to the University of Georgia, so hey, go Dogs, right? And speaking of school, it was actually pretty cool. Today, in one of my new math classes called The Mathematics of Options Pricing, our professor gave us a project that's worth 15% of our grade, and the entire project, more or less, was what I was already planning to do anyway. The objective of this project is to trade with paper money, an amount of $10,000, and just document your trades using a variety of techniques. So whether that's buying stock, options, some more advanced strategies like iron condors, which we will go over eventually on this channel. But I just found it kind of cool. It was kind of like destiny in a way. It was fate. It was meant to be. So not only do I get to knock out two birds with one stone, but I will also get to enlighten you guys on all of these cool trading strategies that I utilize on the daily to allow my portfolio to grow and grow and grow. And I do have to go ahead and tell you guys with the obligatory disclaimer, I'm not a financial advisor, so do not execute the same trades as I do. Please do your due diligence when performing trades. Stock options do carry a significant amount of risk, so trade at your own risk. All right. I believe that's everything. Now, we do have to establish the rules of the 10K to 100K challenge. So rule number one is we'll be trading on Robinhood using roughly $10,000. It was a little bit more, and so that is what we're starting with, $10,000 cash. Rule number two is we'll mostly be focusing on theta gang strategies. Now, for those that don't know, most times when you sell a position, in other words, you create it, you open the position and you sell it to the market, you'll have something very powerful, a very great friend on your side, and that's time. The Greek variable that dictates how your options contract will burn with time is called theta. Now, of course, we're going to dive really deep into theta in later episodes. Theta is my best friend, and it is essentially how I create huge amounts of cash flow just by letting time pass by. All right, rule number three is we must reinvest profits straight into this portfolio. We will not be allowed to transfer any profits out into my bank account, so everything remains here. That way we can compound the 10K even faster. Rule number four is to man up. I'm going to show you guys all my trades, whether they've been winners or losers. That way you guys can see and learn from my mistakes. And lastly, we're going to have a recurring transfer of $150 every 2 weeks. I do suggest everyone have recurring transfers into your brokerage account, whatever your amount may be. For you, it might be $10 every week. For me, it just so happens to be $150. That just sounds a little more realistic because either way, I do dollar cost average all the time. So it is really realistic of what a lot of investors do. So 150 every 2 weeks. Without further ado, we have 15 minutes left into today's trading session. Today's trading day is January 11th, 2022. All right, so let's go ahead and just open up our Robinhood account. And as soon as we do, I actually have to pair my Apple Pencil first. Looks like it's already paired. And I do have my little helper Bean over here. Bean likes to just be a part of things. So looks like the pencil's not working. We'll use our finger. Okay, let's open up. So here we are. We have $10,227. So like I said, a little over 10K. And you can do a lot with 10K. Now, what we're not going to do is invest this into FDs and lotto plays. Definitely don't do that. You will lose your money, I promise you. Plus, it's a really dumb way to lose your money. From a technical standpoint, we will occasionally also be looking at the technical graphs of certain companies, of certain tickers. Our judgment, for the most part, will also be based off of fundamentals. But sometimes, as you'll see, there's a lot of hype stocks like AMC, maybe GameStop, whose Vega value, implied volatility, is up off the roof, right? And so you can take advantage of that volatility and a lot of overly optimistic people. So anyway, our first ticker we're going to look at is a company called Snowflake. Now, I've been following Snowflake for a while, and the charts on Robinhood are not the best. Trust me, I would actually prefer to look at this chart on Thinkorswim. But as you can see, the 1-year chart right here, the maximum that the stock reached was about $400 back in November of, actually it did hit $400 back in November 16th of 2021. Since then, it's taken, you're going to have to move my mouse, come here. All right, sorry. So you can see, yeah, it's taken quite a significant dip. I would say that's about a 25% dip from its recent highs, and that was just in November. Now, the company has solid fundamentals. If we look at their stats right here, their market cap is about $92 billion. They're a solid company, at least I think so. So I'm long-term bullish, but the strategy that we're going to use right now is called a covered call, sometimes called a diagonal spread, okay? What that consists of is we're going to buy one LEAPS, which LEAP stands for Long-Term Equity Anticipation Security. I know that the acronym doesn't really follow. It's a little weird. And yes, I don't mean to sound dumb, but whenever I do say LEAPS, that's just the way the acronym is set up. It's both plural and singular, if that makes any sense. Okay, my main objective when I'm trading covered calls is to buy a really, really far expiration and deep in the money call. So normally what I try to go for is about a 0.70 delta. Sometimes people will call it 70 deltas, okay? So if we look at the 260 call strike for January 20th of 2023, that has a delta of about 0.70. That's exactly what we're looking for. The only downside is not a lot of people really buy LEAPS because, one, they're very expensive, right? So look at this one. It's $83.35 in premium per contract. Now, if we know anything about options contracts, we know that an options call or put gives someone essentially the control of 100 shares of the underlying stock. So this 8330 is going to be multiplied times 100 because this call option controls 100 shares of Snowflake. So we're going to go ahead and do the covered call all in one step. Now you can do it in two different steps, but really there's no real point for it. So we're going to add this plus sign and we are going to spend $8,300 on this very decent leap, right? And I mean, some of the things, of course, I'll make future videos going in detail, but the good thing is even if Snowflake drops, look at this, the current share price is at 301 and my leap is at about 260. Now, it's already been on an enormous downtrend, so I personally do not think, I think we bottomed out here at about the $300 level. I don't see it dropping any further, but if it does, our leap hopefully will still be in the money because it's so deep. It's $41 in the money. So we're going to go ahead and buy that. Now, I typically like to run tri-weekly or monthly contracts. Some people like to do weeklies. I do run weeklies on Neo. The only downside is you really have to be looking at your positions almost constantly. So instead, we're going to receive a bigger upfront premium by selling a contract. Now, here's the second part of a covered call. You buy one call and then you go out and immediately sell another call, a different call, to someone else. Now, you'll never obviously know who you're selling it with. You just get matched up. But anyway, normally when I do sell contracts, I like being a little aggressive. I like to go for about 0.45 deltas, right? So if we look at the $310 strike, this one right now has a delta of about 0.46. Some people like to say this is a 46% chance of being in the money. So what we're going to do is, again, make sure that it's on sale now. We're going to sell the 300 and actually let's look at the 305. Now we're going to go with the 310 just to be on the safe side. So we're also going to hit the plus side, and then we're going to look at our order summary. So we have a 2-option order. This is a diagonal spread. Some people call this strategy a poor man's covered call, and no worries, we will go over it here on the channel. So as you can see, we're buying one leaps for $8,300, and then we're selling one immediately to someone else at a $310 strike. Now keep in mind, the one that I'm selling here in February is out of the money, meaning that the stock price has to rise to $310, but not only $310, it also has to go up a little higher, and what that's called is called a break even. So you of course want to recoup what you paid into that contract, and in this specific example, whoever I'm selling this $310 contract to, they're buying it and they're paying me $1,540 for the privilege of being able to control 100 shares of Snowflake at that determined strike price at that expiration. So anyway, we're going to go ahead and review the order. In a future video, I'm also going to explain what the bid-ask spread is. Basically, if you want an immediate fill, Bean, you're going to have to get off again. Come on. Come here, baby. Come here. You can sit here on my lap right here. So if you want a quick fill, now this is a net debit strategy, meaning that we're ending up having to pay to execute this trade. We're not receiving money, even though we are with the one call that we're selling, we're net debit because our leaps that we're buying is more expensive than what we're receiving in a credit. So if we want an immediate fill, as a net buyer, we would have to be at or near the ask, which is what sellers are willing to sell it at. Now, of course, that's almost $7,000, right? So that's the $8,300 whatever minus the $1,000 so that we're receiving. I don't want to pay that much, right? So the mid price is at about $68.05. This may or may not fill. Let's actually check. So if we swipe up for the mid price, and trust me, so many people lose so much money on the bid and ask spread, it's ridiculous. So as you can see, we're waiting. It's not filling. So, oh, there it is. So our order finally executed, and now we have our diagonal call spread. Awesome. So here it is. So if we go to the call that we sold, it's expiring on the 11th of February. We can look at its Greeks right here: Delta, Gamma, Theta, Vega, and Rho, which I do not have time to explain right now since I have 6 minutes until the market closes. So now what do we have left over? Okay, so after paying nearly $7,000 left over, Robinhood is saying that I have 10K, which is not exactly accurate, but that's because we have to wait to see how this no position ends up playing out. So in reality, we have probably about $3,000 left in buying power. So now we're gonna go over to one of my favorites, is AMC. Now, I know a lot of people were thinking that AMC, for some reason, was going to hit $100,000 per share. Delusional, trust me. If there's any apes out there still holding, please sell. There's too much volatility with AMC going on for me to invest, tens of thousands of dollars like some people are doing. So now what we're going to do is we're going to sell a cash secured put for the same expiration. So we're going to go to sell and we're going to go to put. So we're selling someone a new position. We're creating it out of thin air. Now, as I'll discuss later on, well, it's kind of out of thin air, not really. But in a later video, I'm going to go in detail on this trading strategy. It's one of my favorite ones, and you can combine it with the wheel. So basically, right now, AMC is at about $22, and selling a cash secured put is a bullish sentiment. You want the stock price to go up so that you can profit. So we're going to go ahead and be a little on the safe side. We're going to sell the $21 put. In other words, by February 11th, we need AMC to be above $21. If not, we're in trouble and we may have to roll out our position. And as you'll notice, the $21 put requires $2,100 of collateral. So notice we have $3,200 left over if we sell one. And again, we're going to go for the mid price right now. Right now, we're net sellers. We're selling someone, a contract, a position. If we want an immediate fill, we would have to be right at the bid. But we want to get a little extra money. There goes. So it did execute. So now we have a covered call with the leaps, and we also have a cash secured put. Now, let's go over. Now, I'm going to try to fill these orders as quickly as I can. I have about 4 minutes left. We're now going to do a put credit spread on SPY. So a put credit spread is also a bullish play. So we're going to go actually a little sooner. We're going to go to February 2nd. And the way that this works is you're going to go to put, you're going to buy a put, and then you're going to sell a put, right? And what this is called again is a put credit spread. It's a credit spread. So we're going to buy, I'm thinking SPY is actually going to climb just a little bit. So I'm going to buy the 470 put, and I'm going to sell the 472 slightly out of the money, right? So as you can see, we have a put credit spread, and we're going to receive a total credit of $82. And what I like about this strategy is it is a risk-defined strategy. You know going in how much you can make and how much you can lose. So in this example, we stand to gain the full $82 that we're receiving up front. It just went up to 83. So the prices do fluctuate every minute, or actually, constantly. We stand to lose $117 if SPY is under $470. So we're going to go ahead and run 3 of these. So we're going to get that, and we're going to get a credit of $246 up front. We're going to swipe up to submit, and we got 2 more minutes, I believe, that we can run. So as you can see, right now it's not filling. We have 2 minutes. It's not filling. So because we're receiving a credit, if we want to get an immediate fill, it was canceled. Okay. So if we want an immediate fill, we got to get closer to the bid. We have to receive less money up front, which kind of sucks, but I have 2 minutes. So I'm going to put it at 78 cents, and it should get an immediate fill. There it is. Okay. Now from here, what we're going to do, let's see how much more money we have. We are going to buy just some common stock. Well, not common stock, but just, boring old stock. And what we're going to do is we're going to buy IWM, which is the Russell 2000 ETF. Let's go ahead and just buy 4 shares of this for about $1,000, or about $900. And we have just about $1,000 left over. Okay, so I was going to run an Iron Condor, but it seems like I ran out of time. We have about more or less $500, $600 to go. So in week 2, actually, this is pretty good to have that cash as reserve in case a play comes up. It's always really important to have some cash on standby in the event just something happens in the market. And as you can see right now, in about 10 seconds, there it is. So that sound means the market is closed. And for options, depending on your broker, Robinhood, I really wouldn't trust Robinhood with aftermarket or pre-market trading. But other brokers like Charles Schwab, you can still trade after 4 o'clock and before 9:30. Robinhood, of course, is the brokerage platform for beginners, so I really wouldn't trust it. We're just going to leave things as they are right now. And with data gang strategies, what we have to do is be very patient and just trust our conviction that data is going to run in our favor. And if the trade is profitable, then it's even better. Now, the good thing about data gang strategies is even if you're incorrect, let's say with a covered call, Snowflake tends to go down or up or whatever. It's not the way that you want it to go. The cool thing about data gang strategies is occasionally, even if you're wrong, you can still profit through time decay. And that's what I really love about these, theta decay strategies. They're wonderful. So to recap, we have a covered call with a leaps on snow. We bought a leaps for the $260 strike. It doesn't expire until a year out. And we simultaneously sold another call to someone else at the $310 strike, expiring in 1 month exactly. And we received about $1,500 to do that. We then ran a cash secured put on AMC. And as you can see, we did have to front up $2,100 collateral. In the cash secured put video, I'll explain why that is. But in the event that we do get assigned, if I'm wrong and if AMC goes below $21, I am at risk of being assigned by February 11th. Now, that may or may not be a good thing or a bad thing, depending on what kind of strategy you're looking to use. I'm not afraid of assignment on AMC because I like to run the wheel strategy on this. Meaning, if I get assigned, my $2,100 will go to buying AMC at $21 a share. And I have to buy 100 of them because remember, that's how much an options contract controls. But then what I'll go ahead and do is once I have those 100 shares, I can then run a covered call on AMC because I have 100 shares. You can run a covered call with a leaps or 100 shares. Now, they both have their advantages and disadvantages. And again, I keep saying this, I sound like a broken record. I'm going to go over all of this. Trust me, I'm going to make dedicated videos on everything. But right here at the end of market close, we've made about $4. So AMC went up slightly. And let's look at our SPY put credit spread. Again, with a put credit spread, that means we want SPY to go up. And if you can look after hours here, it just jotted up just a little bit here at the final minutes of the bell. It says that we're losing $3 right now. That's okay. These are hypothetical losses. The important thing is by February 2nd, SPY needs to be preferably above $472 for us to just keep the entire premium. Guys, I know this was a lot of information thrown out at you guys. Oh, and then we also have common stock. So I believe my first video after this one is how to buy and sell stock. Now, I know a lot of you guys are very aware of how to buy and sell stock, but we have to cover the fundamentals before we go over into the deeper strategies like covered calls, like cash secured puts, like iron condors, and all of those. So guys, I really hope you enjoyed. This was week 1. I'm going to keep you guys updated at week 2, and we're going to see how we do. We're also going to go ahead and set up our automatic transfer every month. So we're going to add an automatic deposit. We're going to do, what did I say? Bi-weekly, right? Twice a month. And we're going to do $150. Ben, if you can move your butt just a little bit. There we go. All right. So $150. That's going to be twice a month, but we have to specify when does this start? Will be initiated on the 1st and 15th of every month. So today is the 11th. So in 4 days, we're going to have an extra $150 to play with. So that'll help. And again, this mimics my real world investment strategies. I mean, I dollar cost average, like I said, and have automatic transfers going in on my stuff on my brokerage accounts pretty frequently. So there we have it, guys. We performed 4 different plays. We still have a lot to go. We're starting at 10K, and hopefully in about 2 years' time, hopefully a lot less, we'll have $100,000. But guys, hope you enjoyed. There's a lot more to come. Once again, this is the Diamond Hand Prodigy, aka the one and only. And this has been it for now. But trust me, there's a ton of more content coming up real soon, and I am extremely excited to start up this brand new channel. All right, guys, clocking out for now. Y'all take care.